Let's talk about quarterly earnings and how we can use them in the value investing investment process. Hi, my name is Gary Mishers. I'm the managing partner and chief investment officer of Silver Ring Value Partners. I also teach the value investing seminar at the FW Olin Graduate School of Business. So I think that there's a lot of misunderstanding about what quarterly earnings are actually about and how to use that period. And I'm thinking about that because I'm just finishing out my earnings season. That's why I've been a little bit quieter in recent couple of weeks because I've been focusing where I should be focusing, which is in following my companies and the companies I'm considering for investing. But what should we be doing during the earnings season? So I think let's start with what we should not be doing, right? So I think that there is this game on Wall Street of, oh, did they beat the numbers or did they beat the whisper numbers? Who the heck cares, guys? Really? Come on, let's grow up a little bit. Now, if you're a trader and you're trying to day trade in and out, Robinhood or whatever, some platform these days, okay, I get it. That's your game and that's fine. Good luck. It's not my game. So I'm not even going to opine about that. But let's say you're a long-term investor and you care about the long-term value of the business, you should not be caring, like, did they beat by a nickel? Please, who cares, right? It doesn't mean not. Maybe you should care a lot because the underlying thing, the reasons why they beat by a nickel, should tell you something about how the value range that you've estimated should change, right? And that's an important thing. That's, I think, where you should focus. You should say, how did the incremental information I got this quarter about the long-term economics of the business, how should that affect my value estimate? That's number one. I think it's processing information. And then obviously, what should I do? And that's a separate discussion. But part of what makes public market investing is so interesting is that you have new information and you have new prices, right? You might have bad information that lowers your value range, but the stock price collapses even more than you think that the information merited, and you have one set of decisions. And then maybe you have good information, and maybe the stock moves up. Maybe it's too much. Maybe it's not as much. So it's always the juxtaposition of how is your value changing, where is your value, and how is the price changing, where is that price relative to the value. But I think let's talk about the other aspect of it is you can tell a lot about management and you learn about people, just like in a friendship or any relationship, right? You learn about people. How do you learn? It's not what they say or not solely what they say, it's what they do and what they do over time, right? And I think especially during periods of adversity, and we're certainly experiencing one now for many companies, I think that you as an investor looking in should be assessing management, understanding that there's a lot going on in their companies, but you should be thinking, okay, how are they approaching capital allocation? you know how are they approaching operating the business? How are they making the trade-off, especially now for many businesses where the revenue line is down significantly, certainly under pressure, between cutting costs to generate profit in the short term versus not cutting so much cost that you're hurting the business's long-term profit potential, right? That's a trade-off. Is the management team using this period of time to actually increase its competitive advantage? How? So one of the things you want to see long-term thinking that's driven by long-term economic consideration of the business value, irrespective of short-term optics, right? And what you don't want to see is some guy or gal who are there trying to manage the street's expectations, trying to play some game where they're gonna sandbag the expectations and they're gonna come and they're gonna beat them and they're gonna beat and raise and all this Wall Street jargon and lingo, put it aside and just say, okay, is this manager, are they, making this business more valuable, or are they playing kind of a shell game and like trying to get you to make the stock go up next quarter because maybe their options are expiring and they or whatever, right? So the more you see that people are acting rationally and especially making good choices under pressure of adversity, the more your estimation of the management team should rise. And the more you see gamesmanship and kind of the usual Wall Street nonsense, the more you should say, okay, these guys are average at best. These are, this is not necessarily the team I'm excited to be partnered with for the long term, because they're going to make decisions that are going to potentially trade off long-term value for short-term optics, and we don't want that. So just a quick recap. You want to be thinking about how do you update the value range as a function of new information in the quarter. If at all, sometimes there's nothing material in the quarter. Quarter, by the way, is 1/4 of a year. It's really not that long in the context of a 30, 40, 50-year cash flow stream. So just keep that in mind. But the other component is you want to assess the management team and how are they behaving. And the closer they are to a long-term economic animal, so to speak, the better. And the closer they are to kind of the typical, Wall Street gamesmanship and tricks of, managing and playing expectations games, the less you should think of them, to be honest. I hope this video has been helpful to you. If it has, please hit like and subscribe to my YouTube channel. And thank you for listening, guys.